Good morning. Welcome to another edition of College Coffee Talk. I'm Andy Lockwood. Pearl Lockwood is on special assignment en route to sunnier weather in Orlando, Florida, with two of our college kids on break. Rumor has it, she will not be the day after speaker at CPAP, whatever it's called. She's going to the Harry Potter world, even though she's not a Harry Potter fan. So here I am, going solo, Andy Lockwood, Lockwood College Prep. This is an episode of our weekly College Coffee Talk show. It's also going to be posted in a few other places, including our podcast, which is the College Planning Edge. So join me in a simultaneous sip of coffee if you have that. And now, let's talk about money. A lot of times, Pearl and I do these broadcasts and we talk about, what's happening, breaking news, changes. However, I think it's also a good idea to go back over some of the basics. And because a lot of people don't really understand the fundamentals, and it's frankly easy for Pearl and I to lose track of that because, we're so enmeshed in financial aid and college admissions and helping kids get into college, helping parents pay, negotiating with colleges, SAT prep, ACT prep, and all that. That's all we do. So sometimes it's hard for us to lose sight. So if you have a question today, this is going to be a short little micro lesson on paying for college, then pop it in chat here, or you can email us. That email is currently scrolling across the bottom of this frame, vip@lockwoodcollegeprep.com. If it's something personal, you have an inquiry about getting our help or something like that. And good morning to Chris Couch. Nice to see you. So let's get into it. There's three types of ways to pay for college at a discount. There's more, but I'm only going to talk about the legal ones. There is the need-based system, there's the merit-based system, and then there are tax advantage ways to pay for college, typically for high-income business owners. I'm not a CPA. I know enough about that to be dangerous. I'll talk about that briefly after I address the first two. So need-based aid, merit-based aid, and paying with tax strategies, or tax scholarships, as my personal CPA and college funding expert Rick Darvis, CPA, coined the term decades ago. So need-based aid is based on your, broadly speaking, your resources to pay for college as determined by colleges and the federal regulations, Title IV from the Department of Education. They are derived, your ability to pay is derived from certain formulas. So without getting too much in the weeds, because I will do a full-blown webinar on this coming up in the near future, without getting too much in the weeds, the way it works is you fill out a financial aid application, you submit it, and then a few months later, the college will tell you, here's what you get, or here's what you don't get, as the case may be. So in terms of here's what you get, they will review every college in the country. It takes one particular form called the FAFSA, Free Application for Federal Student Aid. I learned recently that that technology that it's based on the website is from 45 years ago, which explains why it goes in and out and it's not available, probably 70% of the time that Pearl, who handles all those forms in our office, tries to submit forms on the FAFSA. So that's neither here nor there. That's just a little fun sidebar on the fact that when you're dealing with a government agency, it may not always be the most efficient way to get money. Every college takes the FAFSA. It's about 108 questions. It's going to be scaled back supposedly next year to roughly a third of that. Although that may be pushed back another year. That's the current debate. Should we implement all these changes next year? And it asks basic questions about your income, your savings, information about your kids' income, your kids' savings. Relatively straightforward on its face. However, people like to make a ton of mistakes on the FAFSA. Sometimes they're sort of silly ones, seemingly harmless, like mixing up your social security number with your kids or vice versa, or transposing dates of birth or socials, things like that. Other times, they are a lot more serious in that you will sabotage your own eligibility, for example, by disclosing things that the actual rules tell you not to disclose. So a big one, if you care to write this down or make a note of it or go back and watch this later, one of the biggest is in the section that asks you about your investments on the FAFSA. It tells you what not to include. And so many parents ignore that because the rules are not so obvious when you're doing one of these forms. And one of the big ones that people overshare is retirement accounts, your 401k, IRA. Every year we hear from dozens of parents who made those mistakes and ask us, can we correct them? You can correct them. That's a process that you do sort of after the fact. If you stumble across something like this on the internet, on YouTube or Facebook or wherever you're watching this, that should cue you to go ahead and resubmit the FAFSA, then notify the financial aid office. But that's one of the big mistakes that people make, is not understanding what should be shared or disclosed and what should not be shared or disclosed on the FAFSA. So read those rules very, very carefully. Roughly 300 plus colleges require an additional form, not in lieu of, but in addition to the FAFSA, called the CSS Profile. And that is much more complicated and lengthy than the FAFSA. So currently the FAFSA, as I record this in the last day of February 2022, is 100 plus questions. The profile can be 200 or even close to 300 questions, depending on which colleges you are applying to. Incidentally, here's another mistake that people make, is not knowing that there are two processes. When you're getting ready to go to college, there's the process of your college applications, which I'll do another segment on at some point in the near future, that kids fill out, where they list their grades and their scores and their extracurriculars and all the other stuff, essays. But there's also the process of applying for money, which is a separate process with separate and distinct deadlines. So just in the last 2 weeks, we heard from two different people whose kids had already long since applied for college. And now in the end of January in one case, in the beginning of February in the other person's case, they were just turning to trying to get money for college. Unfortunately, for many colleges, the deadlines or the priority deadlines that they request are usually much earlier than January and February. Not all, but usually. So in these particular people's cases, their priority deadlines were November 15th and maybe December 1st. We still submitted the applications for them, but I'm not so sure that they're going to get a full and fair reading of their applications, because that's what colleges say. Get it in before your priority deadline, and that's your best shot of getting money. All right. So back to the other form, the CSS Profile. Some colleges, 300 plus colleges, require that in addition to the FAFSA, and you have to look at each one of the colleges on your potential list to see which colleges require this CSS Profile, which is 200 to 300 questions, much more complicated. It's used mostly by colleges that have their own money to give out. They don't rely solely on federal funds, which is what the FAFSA, free applications for federal student aid, is all about. All right. Just to go down a little bit more of a rabbit hole, a lot of people are divorced. 50-something% of families are divorced, apparently. So the CSS Profile asks about the other parent, the non-custodial parent, meaning currently this means the parent that the child does not live with most of the time. FAFSA, on the other hand, does ask only about one parent, the custodial parent. So what has to be included varies with each application. The CSS Profile, because it's more than twice as long as the FAFSA in most cases, it could ask for 10 times more information. So you need to know this long before your deadlines. And if you're going to do this yourself, you need to block out time at least 1 or 2 weekends to do a really good job, gather all the information you need, understand the questions, understand not only what's included, but what should be omitted. Because again, that's one of the main ways that people sabotage themselves, by over including or over disclosing stuff that shouldn't be disclosed. All right, so after the financial aid office reviews whichever applications it requires, and I just named the 2 most popular ones, but there are others depending on each school. So you're on your own to figure out what applications are required and when they're due, right? So after the financial aid office reviews everything, then they will say, well, based on what we reviewed, here is what we can offer you. And here's the deal with that. It varies. A lot of parents are stunned when they get, great offers from 2 or 3 colleges and less than great offers from 1 or 2 colleges that all reviewed the same data. How can this be? Well, the short answer is, number one, colleges have different budgets. They don't all have the same amount of money. Their endowments vary extremely widely. Number two, just because a college has a large endowment doesn't mean it's particularly generous at all. Doesn't mean that at all necessarily. Like NYU has a fairly substantial endowment. So the University of Michigan, I don't think of either of those colleges as particularly generous, in my experience. You can look this stuff up, by the way, for yourselves. There's a few different resources. I think one of the better, but not 100% accurate sources is the net price calculator. Each college has a net price calculator on its website. They are not uniform. They vary also. But if you were interested in, applying to Georgetown University, you could search Georgetown University net price calculator and plug in some information, and they would come up with a potential offer based on the information that you put in to the net price calculator. The College Board website, collegeboard.org, also publishes information about financial aid generosity. It's not going to be tailored to your situation, but it will give you an idea of how generous that college is or not. All right, so that's one reason that offers vary. Another reason has to do with the relative strength of your child compared to the other kids that he or she is competing with. Even colleges that claim that they are need blind, such as Ivy League schools, still frequently engage in what's called preferential packaging, meaning they will offer a better financial aid package consisting of free money and loans, for the most part, to kids that they prefer. So Ivy League schools don't offer athletic scholarships, but they frequently engage in preferential packaging of their need-based awards to recruited athletes, for example. So that's another reason why these awards can vary greatly. This happens a lot when around this time of year, or even a little bit earlier, kids start hearing back from schools, and they're breathlessly opening up their laptops. They're taking out their phone to of course film themselves as they open up their emails or log into the portals of the colleges with their decisions. And it's great when they start getting into schools, but usually those are the easier ones, the safety type schools first. And then when typical early decision for dream schools, those deadlines to hear back from colleges are usually like mid-December, sometimes beginning of December, but usually in the middle. Frequently they get in, they're psyched, they're crying, hugging, high-fiving, mom and dad, of course, who sometimes care more than the kids, tears of joy, etc. But a few days later, financial aid offer arrives, and that's a cold slap in the face. And sometimes that financial aid award is nowhere near as generous as the awards from the easier schools to get into. And it makes sense, because if you're applying to a college that you're lucky to get into, that you have to beg, borrow, and steal and scratch and claw your way to be admitted to, they're not necessarily going to roll out the red carpet the same way as a school where you're in the top 10 to 20% of the cohort that you're competing with. So that's another big reason. I call that Murphy's College Law. The school you want to get into the most offers you the least amount of money. And then it's up to you to try to negotiate the offer. So I'll talk to you very briefly about this if you want more information on that. I wrote a book called, oh look, I just coincidentally happen to have it here, this one. This is on Amazon. Jeff Bezos is holding a copy for you. How to negotiate the crappy financial aid and merit aid offer. Tell Baze to give you a little bit of a price break. He'll ignore you. The best ways to negotiate. The three. I'm going to give you the shortcut here. That's so you don't have to labor through the 70-page massive War and Peace equivalent of how to negotiate your offer. 3 ways. Number 1 is to have competitive offers from other colleges that are also competitive with the one you're trying to negotiate. So if you're watching this and you have an 11th grader or a 10th grader or younger, remember the best defense is a good offense, is having other offers from other schools in your hip pocket. That's the best way. It doesn't work if you go early decision because you can't use those. Just check the comments here. Yes, if you have any questions. Hello, good morning to Christina. All right. If you have any questions, pop them in here. I will either address them live or we'll go back on replay. So other offers is one of the top 3 ways to use as a way to negotiate. The second really has to do with giving additional information. The next 2, actually, number 2 and number 3 negotiating tips, has to do with sharing new information about either a drop in income since you filed the financial aid applications, or number 3, a significant increase in expenses. So regarding number 2, the drop in income, financial aid is based on what happened 2 years ago, at least in terms of your income. So if you have someone who's graduating high school in 2023, the main data that the financial aid rules contemplate and colleges is your income from 2 years ago, from 2021. But a lot of people had changes in their income, especially over the last couple of years with the pandemic and all that. So I've written a ton of letters that have said words to the effect of, look, I know that a couple of years ago we had a pretty high income on paper, but since then things have been far less rosy. So a drop in income is really important to disclose, and if that happened to you, that is worth appealing over. The third one, increased expenses. Those have to be significant expenses that they wouldn't know about. So one of the things that I hear a lot from people in terms of trying to appeal is like, look, I live in a very high tax area. I'm here on Long Island in New York. We have clients in San Francisco and other, super high tax areas. That's not new information because the financial aid offices see your financial aid application that has your address on there. But new information might be along the line. I just wrote an appeal that was successful for a family, and I wasn't sure which way it was going to go. But the increased expenses that we talked about was the dad was opening up a car wash, and right before the pandemic opened, he was getting everything together, and then the pandemic occurred, I should say, and he had to, he couldn't open, but he still had all these expenses to, the equipment that he paid for, he sunk money into. He had to pay, his real estate. I think he leased I don't think he owned the site that the car wash was on. All sorts of other stuff that went into, running a business. So that wasn't necessarily an increased expenses, or they really were because they're leading up to opening a business, but he didn't have any revenue coming because they were shut down to offset those expenses or even make a profit. So that's kind of a loosely related example. Another one could be, which is very common, could be you have to take care of older relatives, and you help them out. But that's, again, it can't be just like I give them $500. It's got to be something a little bit more significant that bears on your ability to pay for college. Legal bills, getting divorced, shutting down a business, being sued. Those are significant expenses. So those are basically the 3 areas that I think can help mount a successful appeal. Offers from competitor colleges that you actually show to the school that you're trying to go after to get more money from, and then drop in income and increase expenses. All right, so that's all I want to talk about really quick for need-based aid. And again, pop any questions in here if you want to hear those. Um, if you want to get those answered, and if you're listening to this on replay or on our podcast or something like that, you can email us directly. The email is vip@lockwoodcollegeprep.com, and I may answer it on a future episode of College Coffee Talk. Who knows? Wouldn't that be nice? You'd have that going for you, which is nice. All right. Merit-based aid. Best thing I can tell you about merit-based aid is that generally it's easier to get from private colleges where you are at the top of the heap, in that top 10 to 20% of the other kids, of the group of kids that you're competing with. Some out-of-state universities give merit aid frequently, such as University of Delaware, University of Vermont, UMass in the Northeast. I don't see a lot of California schools or West Coast schools doing that, other than Arizona, which I guess is not really a coast. But generally the private schools. So if you don't qualify for need-based aid, and a lot of our clients don't, it's actually not such a big deal, because there's more merit-based aid out there for the taking than there is need-based aid. That's been a shift that occurred, I think, in 2008. Maybe it's been a long time. And now in today's competitive environment, college, where there's more applications going in, colleges have less of a feel for, if they admit you, whether you're actually going to show up. So I think there's more negotiating and haggling in play, particularly for merit aid. That's been my early experience. It was pretty good last year with negotiating, and this year I think it's going to be okay. Colleges, by the way, had a great year despite the pandemic. They had a great year in terms of their endowment returns. The stock market was big. Even though a lot of colleges don't invest their endowments in the stock market, they too made a ton of money. I remember reading an article a couple months ago for colleges, I think with $500 million and up in their endowments, had a average return of like 32%. Something outstanding last year. It was amazing. So the money's there, folks. Don't be afraid to ask for more. And a lot of it's on the merit side. So understand that it's not over if you don't qualify for need-based aid by any stretch. All right, last thing I want to say before we wrap up here. So last call for questions, or if you just want to say hi in chat, I'd welcome that. The tax strategies for high-income business owners. So what that involves, in a nutshell, this is me as a non-CPA, is sheltering income. So there's different ways to do that. A lot of people think of, well, if I contribute to my retirement accounts, I'm going to lower my taxable income. Is that going to help me for financial aid? Or they assume that's going to help them. That's actually not one of the ways that helps you for financial aid, because that gets added back. But if you are a business owner, there might be ways to shelter income so that your savings is not necessarily coming from the colleges. It's coming from Uncle Sam, from the tax code, from the IRS. Like, who cares where it's coming from, right? Money is money. So in need-based aid, I'm just by way of contrast, money in your kids' names, savings accounts, penalizes you far more than if it were in your own names. And by the way, that's one of the mistakes that people make on the FAFSA, which I opened up with talking about today. So if you missed that, definitely watch the beginning. I talked about some of the biggest mistakes that people make. I think I named 3 or 4. So I'm adding to that. Another one is putting information that should be about the parents in the kids' names, the kid boxes on the FAFSA, so to speak, and vice versa. So if you have a couple $100,000, saved up in your name, that penalizes you roughly $11,000 and change. If you mistakenly say that's in your kid's name, it's very easy to do on these forms, because they are, even though they're straightforward, they're forms, right? So if you're doing them like, at 2 a.m. on the day that they're due or something, you might make mistakes. So that same amount could penalize, but put it in your kid's name by accident, could penalize you like 50 grand, right? It really is a big difference. So for need-based aid, you want to take money out of your kids' names. But now in this part of the today's show here, I'm talking about tax strategies or tax scholarships for high income families. And that's more about taking money and putting it into your kids' names. So, for example, kids' income is taxed at a much lower marginal rate than parents' income. So shifting that income is one of the shelters. And again, that's going to free up, typically it's going to free up money from the tax code, not necessarily from the college financial aid system. However, there are also strategies where kids don't have to show money. There's tax credits and all sorts of other stuff. So that's one thing. Another way is, most small businesses are organized as S corps or sometimes LLCs, mostly. And the reason for that is because accountants recommend that because there's only one level of taxation. Again, I'm speaking out of school here. I'm a recovering attorney. I am not a CPA. So the advantage is you're not taxed twice, like a regular corporation, a C corp. Income comes in and you're taxed at the corporate level, and then if you dividend it out to your owners, to your shareholders, then you're taxed again. So that's why a lot of accountants say, let's just do an S corp, just to flow through. Okay, it can make sense in some cases, and this is something that I personally did. Doesn't mean it's right for you. How many disclaimers am I going to give? It's like a bit of information, then 2 disclaimers. God, will this guy shut up about that? All right. So the advantage in a situation like that is if you take in a bunch of income at the corporate level and store it there, it does not filter down to the shareholders unless you dividend it out or you run payroll or something like that. So if you can come up with other ways to reap the benefit of that income, these are all legal and ethical ways that very high level multimillionaire and billionaire type business owners and other top 1%ers do. If you can keep that income off of your personal balance sheet, so to speak, that's going to also stay off your personal financial aid balance sheet, or I should say your personal income statement and balance sheet for financial aid. So what that does is lower your income, not only for tax purposes, potentially, if you structure it right, but also in the financial aid formulas. And income is the most important part, again, of any financial aid office's consideration of how much you're going to receive or not receive. Income and assets are treated completely differently. Income is penalized up to 47% of that amount that you show on paper, your adjusted gross. Actually, all income, not just adjusted gross. And parent assets are penalized, savings, the ones that count, are penalized at roughly 5%. So big discrepancy between income and assets. So if you can figure out a way to control your income, and again, 99% of the time that's for business owners, and you do things right, what you might be able to do is lower your income for tax purposes, lower income for financial aid, need-based financial aid purposes. There might be other benefits to that. So that's something you should look at with a qualified accountant. And I don't hesitate to refer people to Rick, my guy. So if that's something that you're interested in, that's something you should email me, not post here. Once again, VIP@lockwoodcollegeprep.com. He's a little quirky, and that's probably surprising to you that I would work with someone like that. But he's a great guy. And if you're a client of ours, I will refer you. I should specify that. If you're not a client of ours, I can't vouch for you, so I will not. That's really it. So let me just wrap up with questions here. I gave last call. Let's see what's going on here. Christina Albano, thankfully COVID's impact seems to have resulted in some give on the merit aid for returning students, where grades may not have quite made this requirement. Phew. Right. Thank you for bringing that point up. Most merit aid, probably all merit aid scholarships from colleges require that you maintain a minimum GPA. Usually it's like 3.0, it could be 3.2. So if you don't have that, then you're in danger of losing your scholarship. But as Christine just pointed out, so this year, and probably this year only, colleges have been a little bit lenient, not completely, on waiving those requirements particularly if you just missed hitting that 3.2 or that 3.0. So very good point and important. All right. That is going to do it for this episode of College Coffee Talk. Have a great week. Wherever you're listening to this, don't hesitate to reach out. Please share this. If you can give us a rating, a 6 on a scale of 1 to 5, something reasonable like that, I appreciate that also. And Pearl and I together will be back next week once she returns from her southern swing and she's all tan and I'm stuck here in the cold Northeast. But enough about me. This is about you. Have a great week, and we'll talk to you soon. Bye-bye.